Welcome. Welcome all who signed in today. And thank you, Shen Tong, for taking the time. Just some explanation. If you have a question, just type it in the comments area or in what you will call the chat area, and we will address those questions in the second half of this event. Okay? If you find anything great, just clap, confused, or choose mind blown of the emoji at the bottom. So our guest today is Shen Tong. Shen, for those of you who are not familiar with it, give us briefly, you have an incredible history of one of the original Tiananmen Square dissidents who fled, and now you're one of the leading food investors or food technology investors or slow food investors in the United States. If you can kind of walk us through that part of your life, and how did you end up where you are now?
Well, I guess growing up in China I was born in late 60s and growing up in 70s and early 80s in China. There's a food scarcity. I think that's the deep-seated fear. It's like gotta feed, and in fact that's very interesting in life. Robert, often comes full circle that you realize that now the tremendous geopolitical and the new Cold War that's happening between China and U.S. and you realize how the importance of natural resources also during because of the pandemic that China is a country with massive food import. But that aside, just to answer your question, so I was part of the national student movement for a few years in the mid to late 80s. It all accumulated to this massive national nonviolent protest, which was known as in the West as a Tiananmen protest. That was estimated over 150 million people by our official account in 420 cities across China. Most people know about the Beijing part because of we happen to have a very interesting situation that China, Russia at that time Soviet Union, had their first leadership summit after 30 years of the breakdown of the relationship, which is again now comes full circle because of the new Cold War just started a few weeks ago between the United States and China and the three countries' relationship. But back then, in the summer of 1989, Gorbachev, for those of you who are over 30, you may remember this guy, Gorbachev was visiting Beijing, meeting with Deng Xiaoping and the Chinese leadership. So because of that, the world press was there. There are thousands of top journalists, networks from the West, from all over the world in Beijing. And so they thought, well, we have the student protest. This will be a nice footnote to the Sino Russia, Soviet Union, China summit after 30 years. Of course, as we know now, it became barely a footnote to this largest nonviolent protest in human history. Right? So one thing that's the history's irony is that being the most massive and nonviolent protest, not only in China but in human history, our movement was remembered because by the bloody crackdown at the night of June 3rd and the morning of June 4th. So it's a Tiananmen massacre that really impressed the world. That's how we remember it. But it was a rare moment in Chinese history. It lasted about 7 weeks, where crime rate was wrong, even though the police were pulled out of the street, and people were truly happy. There was a general sense of hope, rising expectations, and trust. And of course, that's all changed dramatically overnight. So I was lucky. Again, I was a part of the national leadership. I was 6 weeks after the Tiananmen massacre. I managed to escape China, went through Japan and landed in New York. So I've been in exile ever since. I was a little over 31 years ago. I'm clearly dating myself, but so after that, I continued my study. I was a student in Botany in the study of plants in biology department in Beijing University. So I continued that, but also got into genetics, finishing my undergraduate degree in Boston, and then so again, life is full circle. If you look at the two end of the spectrum of the food innovation space today, there's the genetics and more processing, more technology, more science, even what's known as self-agriculture, as for plant-based meat alternative, right? Or just self-agriculture for meat alternative, versus the more wholesome ingredients and preserve instead of processing. So that's kind of representing two end of the vast spectrum of this is fascinating food innovation space. That's kind of for me. That's also a personal full circle with my study in the plants and in now was mostly in biotech, right? So that was my academic path. Continued that into Harvard University and the Boston University, my 2 doctorate track. But along the way, I founded Human Rights Foundation and then Cultural Exchange Foundation. And I start to build startups, first just to feed into those foundations, because I quickly realized that doing really fantastic idealist projects through nonprofit means you have to raise money all the time. So I thought, why don't we just convince some of the donors to also invest, because we have this amazing, vast network of journalists and writers and artists in China and their counterpart in the U.S. and Europe. Why don't we build businesses that are economically sustainable and feed into the foundation projects, at least for those who are not in jail in China, right? So and there's just, they didn't put everybody in jail at the time. So so that's how I backed into entrepreneurship. And it was very misleading also, because I thought it was easy. Just like I thought it was easy to get 150 million people on the street in 2 weeks, and then build my first radio station in 10 hours. Right? So I was really seriously misled, Robert, in my youth, and thinking how easy it is, and how even if you fail, you can make a massive impact to the world. So now, after that, I learned the hard way when I become an investor. That's how usually you think you're good at building companies and you become an investor. I learned the hard way for like a decade. Eventually, I joined a global tier 1 VC. It's an evergreen fund, which is really, really aligned with how I look at growth and value creation and impact. And we invested in accelerators. So again, a few years ago, this all comes full circle, and I kind of took my academic interest of biodiversity and innovation, being serial entrepreneur and being a venture capitalist with a long-term multi-stage view. That all come together in a thesis, kind of our theory of change, that we can make the world a better place through food agriculture innovation. That's the founding of the Food Future Co., which is an accelerator fund based in New York City. Robert, you're on mute.
You used the word not accelerator when you were describing. You were using the word scale-ups. Mm-hmm. About the companies that. So what's the difference between incubator, accelerator, and scale up?
Yeah, incubator came around, I think, more than 3 decades ago. It became very successful, but it became a commonplace where the startups is passive. So even though it's highly available, there's lots of incubators of various forms. It wasn't until about 10 years ago, incubator kind of find its, in the tech world, we call it killer app, the killer applications. So it's a proactive mentoring and advising, not in the boot camp style, but in a way that really not only kind of evolved incubator into the 2.0, but unintentionally, and this is very interesting, unintentionally challenged the model of business school. So basically, you have a situation, people either in the late 20s or nowadays, even in their early 50s, having a choice of going back to a top business school paying $100,000, if not a lot more, to get another degree, and then in hindsight say, well, the most valuable part is to get the network. Or you have the choice of getting $100,000, getting the practitioners and serial founders and domain experts and even academians to be part of your brain trust, share with other companies based on a particular innovation or startup idea. So that's the model of Accelerator, which is building a brain trust that at least in the top Accelerator, in our case, that is the best advisors and mentors, or eventually board members, even executives you can get, but using them in a small fraction so that you can intellectually, in terms of expertise, really compete to the biggest companies in our space they're trying to unseat, but then you don't have to put up the cost. So that's really the key thing. That's why it really challenges even the institution or business school. So now, in Full Future Co., when I get into the food and agriculture space, I realized being in the accelerator space for quite a long time, that it's relatively easy to start up a food company. Everybody have their grandma's recipe, right? And they're going to make the next best pasta or fried rice. And this is becoming true also across the board, because nowadays it's relatively easy to start off a startup idea, right? There's money, there's a lot of willing encouragement. In Hollywood, we say people die from encouragement, right? So people just charge forward, say, I'm going to do a startup. I'm going to, 30 years ago, Robert, you may remember, everybody have a novel in their mind, right? So I'm going to write the great American or French novel, or I'm going to make a film, right, in my life. Now it's a startup. They need to get out of the system, right? But what's really challenging is that this is something, a bit of epiphany, is that in the 1990s, one of probably the most important business school innovations, it's in this country at least, is this concept of crossing the chasm. So in other words, that a really brilliant idea get early followings. We call them co-innovators, right? And then you even get proof in what we call early adopters, where you got really interested following. You start to, as a product, for example, you start to sell. As a cultural phenomenon, you start to have a niche following. What's really challenging in terms of moving the needle, in terms of becoming a mainstream phenomenon, is the adoption moving from the early adopter into the mainstream. So that's a concept of the scary chasm to cross from that point onto the mainstream. So that's where Full Future Co. and this whole where we're pioneering is scale up stage acceleration that requires totally different set of expertise and help, and even the funding landscape is different compared to typical startup. So, for example, our companies usually they vary. We have over 50 companies now in the portfolio, but for example in consumer packaged goods, healthy snacks and packaged frozen meat, frozen meals. They usually are doing about $500,000, $1 million revenue. So it's still an incredibly young company, but they're certainly not a business plan or post-product pre-revenue. We're just selling pilot in a few dozen stores. They have hundreds of stores. They basically have their day job. They're not doing ramen diet in their mother's basement. So, but from there, the data shows, just using this particular space, the consumer packaged goods, that all the breakout new concept, new snacks, new meals, and whatever you see in the supermarket, right? There being a lot of breakouts, but it's very interesting that their revenue plateau between 3 to 10 million, and it's consistent in the last 30, 40 years. So even though there's a lot of innovations, they don't really move the needle by scaling and moving into the mainstream. So our idea is that there are plenty of startups, but then they need much more serious help to chaperone them to cross this valley of death, to cross this scary chasm from early adopter into early majority, if that makes sense.
It does make sense. You mentioned, when we were chatting, you mentioned to me of the undervaluation of a lot of food innovation companies as compared to Instagram and TikTok and all these other silly, useless apps that don't feed anybody. But they certainly get massive valuations. Is that changing in the food sector?
Yes, I mean, the big food is on the decline for now nearly a decade, and dramatically so the last 5 years. This is not just the famous case of McDonald's globally declining on their top line. And of course the bottom line, but their overall revenue declines year after year. I think it's in the 5th year. This is across the board of all major food and major agricultural companies. They're declining. I mean, if you look at just a slice of it, the financial market, the public market, right? Well, generally with the up and downs like last few months, the stock market goes up. I think the last three decades it grows about 11% a year, right? But you look at the overall food agriculture company, it goes down. There's such a divergence. You can see a divergence just in the biggest public companies' valuation, and this includes all their really real hard work of acquiring the startup companies, so that they include they're outsourcing innovation, buying the high growth revenue. So that's generally the case, right? And it's treated as a commodity, right? But at the same time, you look at the total size of the space. So it's nearly 12 trillion last year, food agriculture globally, right? Compared to 450 billion of the global software market. So we're talking about 20, 30 times of this difference of annual revenue. And all of this, when I say all of this, agriculture, everything from soil condition, soil health, condition soil, what you put in soil, what do you do with the soil, to growing, to harvest loss, to food loss, to food waste, to supply chain, to the fresh grocery produce and meat, to CPGs, consumer packaged goods, to restaurants. All of this are ripe for disruption. And it can and should be disrupted, not just as massive financial value creation, but tremendous amount of impact. It's the single largest category of impact creation in carbon sink, for example. More than energy, significantly more than energy as a category, right? So that's to answer your question, Robert. That you look at that kind of things, that kind of scale, right? For investors, food is really the new internet. This is the upcoming largest value creation opportunity since the internet revolution.
If that's the case, I mean, agriculture is the largest employer in the world. I saw the figure of 1.1 billion people work in small scale agriculture. So if there's going to be this massive disruption, is it also going to eliminate a great deal of jobs?
Yes and no, right? But there are multiple things happening because the sheer size of the space. And actually, one more thing about your last question, right? So 5 years ago, we will have a very different conversation than today, talking about this potential. But today, things are different. 5 years ago, nobody can imagine that the largest IPO of the year, actually, in fact, the best performing IPO nearly 2 decades, is a company that just use processing to process vegetable to make fake meat. That company called Beyond Meat. That was the largest IPO last year, the best performing one since year 2000. Last Friday, exactly a week ago, a company called Vital Farms, which simply put organic grown chickens' eggs into cartons and put in the supermarket and therefore have very low margin, went on IPO with 67 IPO day increase and become a $1.4 billion company. So now we have two super unicorns, as the tech giants in Silicon Valley would call, right? Multi-billion-dollar company, both in not only food. Clearly, these are food companies, right? But in obscure areas, only a few years ago, the people wouldn't think it would even warrant an IPO, right? So now those are just two areas: plant-based meat alternative, that's Beyond Meat, and direct from farm consumer packaged goods, organic eggs, right? Those are two categories I certainly didn't see 5 years ago when I started this full time. And there are dozens of this kind of areas, from heritage food to ethnic food to food waste. How could food waste become sexy? It's that's a big mainstream area now, and there's so much value to be savaged. It's called waste value in general, but in food is just a huge category. And then you look at organic, you look at local supply chain, and we track at Full Future Co. We track over 40 some areas like this, and each of these categories will have multiple winners, like Vital Farms and Beyond Meat. So the financial proof is there, and it's happening so fast. This is all within the last less than a year.
You've probably looked at thousands and thousands of companies in the last 5 or 10 years, maybe in the last year, and you choose a very small number, probably. You don't obviously invest in all of them. If you had to kind of break it up into 2 or 3 categories, is it mainly in CO2 sequestering, in land reclamation? Is it in food processing? Is it in snacks? Is it just in packaging, what you were talking about for the eggs? Where are you mainly focusing your attention?
Yeah, I'm actually just putting power in for my computer.
Okay.
So yes, we have a less than 1% emission rate, which means that we have a few hundreds applicants every half year, and we take 4 to 6 companies for each of the program. We call them a cohort, and so far 9 cohorts graduated. So yes, it's a few thousand, maybe approaching 10,000 companies that we review, that send in their application. So it's highly competitive, and compared to my alma maters, I mean, it's actually harder to get into by that number compared to maybe 2 to 3% in Beijing University or Harvard. But we in the traditional sense, the change makers and the scale up stage companies we look at fall into largely 3 categories. The most proven category is similar to the last 2 big IPOs, are the CPGs, the consumer packaged goods. So half of our companies. So that means that we have so far 53 companies graduated from 9 programs, and we've made together about 80 some investment, including follow-on investments. So we don't just write one check; we write follow-on checks, and so our multi-stage, long-term, patient investors starting very early with the companies. And so the 3 categories are, half of those companies are CPG companies, they're brands. They're local concept, like Seal the Season is one of the leading companies. They use flash frozen technology, but not high tech, but it's appropriate technology simply to shift the season. So in New York, for example, I go to the grocery stores that buy Seal the Season bags that will have strawberries from Connecticut and the raspberries and blueberries from the or peaches from Pennsylvania or New Jersey, basically not Pennsylvania, but the tri-state area, where they were harvested at their peak, and then just flash frozen, put them back there for you seal that season. So you get in all the stores. So that's an example of a CPG company. The second category is marketplace. An example would be a company called 4P Food, Washington, D.C. based company, where they aggregate smallholders. Basically, they're largely using more traditional, therefore much more healthy and regenerative organic farming practices. So they aggregate a few hundred farmers around each major city. So around New York City, cosmopolitan area, Washington D.C., and so on and so forth, right? So basically, you get a farm share, right? Either it's delivered to a door, or a lot of people actually go to dozens of points in the city to pick up their fresh farm share coming directly from the nearby farms. So you can imagine how simple that idea is. It totally disrupts the grocery supply chain, which is, if anyone's interested and care to get into that, is that each fresh item in the U.S. and in Europe is similar, travels 6 to 7 aggregation points to get to the eater. How does that translate? In the U.S., each of those items travel 1,500 miles on average. And then each apple in the U.S. takes average 157 days from the tree to your fridge. So that's 2 seasons. So we're really shifting it. So when I think about that 1,500 miles drop down to, when we say local, we basically define it about 75 to 100 miles, right? So that's 20 times saving just on transportation. And you think about, just a week-old produce versus 157 days, right? How much nutrition density, right? How much economy that's achieved in terms of input and what becomes food that nourish our body, right? So all of that, this is kind of a business innovation through B2C marketplace. So again, CPG, marketplaces like 4P Food. And then the last part is the platforms and supply chain. So any platforms that connect capital direct to a farmer, like a Texas company called Harvest Return, they do crop equity for specialty crops and heritage crops for farms. It could be bamboo farm, it could be indoor agriculture, it could be CBD extraction indoor plant in the United States or in Africa. So they're doing very successfully. Again, another blue ocean idea, underserved area, or an app and technology platform that connect farmers directly to restaurants. So that makes about another dozen of the companies in our current portfolio. That's a supply chain innovation and the technology platforms. But there are so many exciting innovations in this space, Robert, that anything from scanning the soil to understand the holistic health of the microbiome in the soil, which feeds into the whole process, right? All the way to packaging, very non-intrusive, biodegradable, environmentally friendly coating of the produce and fresh product to make it last longer.
Thank you. So I see you have a broad understanding, and you told me that you're looking of expanding and maybe moving to Europe. Would you be allowed to work in China? Would you be allowed to go back? I mean, do you have family probably still in China? Wouldn't China be a better market for you?
I wouldn't say it's better, but the simple answer is that it's a simple answer for everything when it comes to China, especially the current political China in their interaction with the rest of the world, and particularly with the U.S. and the Western industrial countries. The answer is it's complicated. It's multifaceted. So, for example, Robert, I tell you, one of my first successful startup. I was a media for a very long time, and so I had the TV production company, and I had a book publishing system basically, and both businesses got into China, become wildly successful. The TV production company produced #1 rated show for many years. Now it's still the #2 most recognized brand in all of China, and guess what #1 is? It's Coca-Cola. So #2 is a TV show called Tell As It Is, right? 实话实说 in Chinese. So our ownership got taken 100% taken away by the government, because when we start to produce social issues that generated a lot of audience but also controversy. One of the issues that any parent may find it very ironic in the West is that the show that really got us in trouble, finally, the last nail in our coffin in terms of our ownership of that show, the show is still going. right? And it has 30-some copycats at the provincial level. But the topic is, can parents use corporal punishment? Can parents hit their kids? Right, which is a legitimate question in China, right? Here you call social services and the police, right? And then you just calculate how far your father is and how far the phone is, and you get to the phone you call. And but in China it's different. So, but the propaganda department immediately recognized that, that's a reference to Tiananmen, right? Because their justification is that you kids got out of hands. We just punished you, right? I mean, sure, we didn't have water cannons and billy clubs. We just used bullets because we were not prepared for that kind of peaceful demonstration. That was a justification in the early 90s. I mean, you're a little over 30, Robert. You remember that, right? I mean, that's what the China's paramount leader at that time, Jiang Zemin, said to Mike Wallace, I think, to a U.S. journalist. Oh, we were not prepared to have a peaceful pacifying this massive protest. So that's why we use machine guns and bullets and tanks, right? So the other example is that our book publishing system, we in 1 year we had 7 out of the top 10 bestsellers in China. This is 1993. And we had the physical bookstore, which was the largest bookstore across the street from my alma mater, Beijing University. So we're doing really, really well, right? And the irony is this: that bookstore, that publishing system cannot publish my books, even though we're the investor, the founder of the group. So that's let's call it, to simplify, that's the duality of China for about 2 decades. So now all of that has changed for the worse, because there's much tighter control by the current leadership. So basically, this has been going on even before Xi, but certainly after Xi Jinping took over power. So it's an interesting space, even though China needs a lot of food innovation, everything we talked about, from supply chain, from very natural resources, right? It needs a lot of innovation. The food innovation, I think, is not that integrated with the rest of the world yet. But back to our platform, we have Chinese investors, and Future Co is not about Shen Tong. I mean, we have partners, and there are major families and funds in China that co-invest with us. So that part, similar to my TV and book system, as businesses, we do have a global portfolio with Chinese nationals funded companies and co-investors. As businesses, I think you will thrive. But like all other major industries, the current Cold War would change a few things. Yeah.
So, I was a bit surprised. So you have mainland Chinese investors in your fund or
Yes.
in your activity.
Yes.
I know you said it's complicated. You're not able probably to visit China, I guess. I don't think they're doing what the Russians do, of sending somebody with poison to poison you. But how do you navigate that?
Not with me, but with others, yes. Yeah, they do that. Yeah, but to answer your question, I mean, like for, you think of an early 1990s, for nearly 30 years, all my businesses do get to, I mean, not all of them, most of them do get to multi-region, not just Boston or New York, not just United States or North America. They do get to Europe, get to other parts of the world, Latin America. I mean, basically all continents. Our company, the last cohort alone, the applicants are from 26 countries. I think we've not only covered all the major continents in terms of application. I mean, think about I think 8,000 or 9,000 applicants. So it's really from all corners of the world. So it's just a matter of a selection that we have Chinese applicants. That's and Taiwan and Hong Kong and Japanese and Singapore, Israel, you name it, right? I mean, Africa, of course, European and Latin American companies. For me, this is I'm the founder of one of the partners. We have colleagues working in China. All my major previous company that was in Asia had operation in China. I just don't personally get involved. So the best defense for our China office is that I really don't talk to Shen, and they don't. We talk, but the market economy in its a particular version of China. So it's basically I wouldn't say free, but state monitored, somewhat controlled enterprises and marketplaces have thrived, right? With all its social, environmental, governance problems, but for 30 years, that's the China miracle, right? The economic growth is undeniable. So that part is booming, and there's no surprise that if a business makes sense, it often finds its way in the Chinese market. But we have this internal wall, Shen and the China branch or China subsidiary.
I mean, you speak Mandarin, and you still have friends. You probably read Chinese newspapers or blogs. Where do you think the Chinese international relations will go in the next 3 to 5 years?
Yeah, I'm still very much a China watcher, and as a writer, I've write in both languages. It took me a long time to write well in English. I still struggle with it. You can hear the accent, for example, here, a strong one. But I do write in both languages, and I watch very closely with what's going on in China, which is increasingly in multiple ways, and unfortunately often negative ways, affects the rest of the world. If you're a student of history, none of this is surprising. What's happening in the last few weeks, and actually for more than a year to come. We first start with the U.S.-China trade war under Trump administration and under Xi Jinping. It's a reversal of something that started 49 years ago, with a secret visit first by Henry Kissinger, and then what's known as the normalization and the U.S.-China relationship with Nixon's visit in 1972. It's the exact reversal of that. And this all hit home because in the 80s, as young idealistic change maker in China, we look up to the U.S. and in generally Western constitutional democracy and market economy, and thinking that should be the model, right? And China took the economic reform, not the political reform, and Russia did the opposite way at that time, right? In the 80s. But as I was exiled following the very dramatic, tragic ending of Tiananmen protests, which is known as Tiananmen massacre, I came to this country. The debate here lasted a short while about what to do about China. As U.S. is the only superpower, becoming the only superpower, and the NATO's and the rest of the Western world, right? But largely the policy continues with Republican and Democrats president, which is that we'll engage with China. At the time, the purpose was gone. The China policy in the 1970s is to use China to contain Soviet Union. Soviet Union collapsed in the early 90s as well, but the business community here largely succeeded in saying that if we bring China into the international order, they will behave better and better. And domestically, if they get richer, 10 years later we'll have free election. It's lunacy, and we all know that. But there's a lot of money and lots of money in politics that was at stake. That's really dominated policy till about a year ago. Another very interesting cultural aspect is that I noticed when I first came here 31 years ago is that all Russian experts in America hate Russia, and all sinologists, all China experts love China. So there is a very interesting cultural and personal aspects. Americans historically, despite of China's denouncing forever about America being the imperialist and the bad guys, and you think if you're in China and read only Chinese press, you think the Secretary of State Pompeo is the worst human being ever. Right? But Americans just really, for some reason, really love Chinese and love China. So I think it will be very interesting, not just the election in November, which we know what's going on in the U.S., but also what's behind the scene, which is happening right now in the famous secret annual meeting happening in a seaside resort called Beidaihe, not far from Beijing, how Xi Jinping power goes. So those top-level power struggle, and in this case, hopefully in the U.S. over here is a peaceful transition of power or re-election of Trump. Of course, everybody see that will affect U.S.-China relationship and global politics and what's going to happen, whether this Cold War, which is reality now, will last, right? But it's also that the massive geopolitical and global politics and economical changes that we're in a very uncertain time. And one thing I will point out, you look at the last couple of days' news, right? Soviet Union back then, during the middle and end of Cold War, was completely isolated economically. I wouldn't say isolated as Eastern Bloc, but their economy is not integrated at all with the Western world and the rest of the world. China is the exact opposite. So it's no surprising because, he's just shutting down a few apps and forcing TikTok to be sold to Microsoft. No, that is the main battle line, because it's a technology, it's vaccines, and it's the economy that is today's Cold War dynamics.
I have Beata has a question, which I probably am sure. I think I know the answer. Would you venture into other? You focus mainly in food technology or agriculture or CPG, as you were talking about. But would you venture into other new technologies like fintech or clean tech, etc., or will you always remain in the food business?
Yeah, two parts answer, Beata. One is yes, through the lens. It's almost like this famous phrase in Silicon Valley: "Software is eating the world." And for us, it's literal. Food is eating the world, right? We're eating food. So as an example, as I mentioned before, we have a fintech platform. I personally and my previous fund invested in fintech platforms, but it comes handy now to bridge directly between interested investors in conservative investment, conservative asset allocation into land, and bridge that for a better purpose and higher return, which is smallholders growing high-value crops and or new type of crops. I mentioned bamboo. It could be quinoa. It could be extremely high-value processing, such as CBD from hemp and from those kind of canopies, right? So there are all kinds of things because the agriculture food space is so vast, right? But as a accelerator fund, we have been methodically expanding into three other areas that are intrinsically connected, but they also stand on their own, with also massive opportunities and impact. Is health and wellness, and sustainable beauty and sustainable fashion, which share the same supply chain or same supply chain logic, global and local. And also the technology, which my core team have always been very strong. That's our background before food agriculture. So we're looking at all technologies, deep tech and immediately applied tech in the SDG areas. We call it SDG tech. This is the United Nations SDG goals from Goal 1 to Goal 16. For example, in the 24 company portfolio of food, we have 13 of the 24 companies founders are 13 companies are women founded and co-founded. It's not something we start out to announce because it was really hard to work in the gender area in the startup space where only 1 out of 16 companies are women founded or co-founded, right? So a year ago we finally achieved 50%. And it took some time, but it's really started to pay off. So that's just another aspect as an example that is seemingly unrelated to our core thesis, but those long-term major impact blue ocean areas actually start to all fit in, not as a challenge, but more as an opportunity to start to converge and fit into both of our impact and our value creation goal. So again, those are the three new areas that we're expanding to become independent areas, independent from food agriculture.
Okay. Donald from Florida University had a question. Given the current climate in Hong Kong and the events surrounding the global pandemic, how would you characterize the business environment for small business startups?
Oh, startup founders. The best startup founders are similar to traditional mystery Chinese scholars. You work with riddles. If there's inconsistency and a major conflict, and if there's a crisis, that's the best time. For people who naturally gravitate toward that as a challenging, interesting opportunity, that's the fundamental quality of a startup founder. That's certainly what we look for. That kind of a way to dive into the wreckage and not just make the best out of the bad situation, but take the bad situation as a moment of pivot for society, for behavior shift, for cultural shift, right? So basically, I mean, that sounds abstract because pardon me, as a Harvard-trained philosopher, and so I tend to think about big and useless questions and talking riddles. But fundamentally, that's what it. For example, you look at sustainable energy, and now with one of the easiest areas, we're not getting into it, but so it's an objective example, is that if you have the solar installation and the insulation of buildings, that will generate local jobs, right? The increased flow of trades between major markets like China and North America will generate a whole set of new opportunities. But the cutoff is the same thing. So the local supply chain, look at our universe, right? The manufacturing, the co-packing, the transportation, the distribution, and it will all change, are changing, right? And during the pandemic, all our companies that were each individual company that does direct consumer B2C increased tremendously. On average, our B2C and D2C businesses in the last 4 or 5 months increased more than 3x in revenue. So some of them have increased more than 10 times, right? While B2B got completely crushed. So I look at the resilience of our founders. I know, well, we're lucky we got the right founders because our company on average have thrived during this major pandemic, including company that was more on B2B, which within a few weeks, the revenue down to zero, right? Because people are not going to the universities or the major corporation. They're not going to the offices of like our customers, like Facebook or LinkedIn or Uber, or Airbnb, right? But but meanwhile, home ordering D2C and B2C just exploded, right? So that's a small, very recent example of the pivot and resilience in the founders, in founder quality, really, and in the culture and DNA team build. That's why we believe all the interesting things that will really make a difference, again, in impact and in value creation, are always going to be in the early stage. You got to work with these entrepreneurs in early stage and really build this culture that the only constant is change. The only constant is becoming, not being.
Okay. We have actually a few questions that are kind of related to plant-based. So Sam wanted to know, I'm going to take these questions, all of them together. Do you notice a pattern in terms of demand of plant-based products, and do you know why these products are more popular in some cities than others? I would expect that cities with a lot of young people, students and vegans, would have a lot of high demand for plant-based products. Christina was saying that those plant-based companies he mentioned are serving the top 5 to 10% of population, not real solution to the world's food shortage. Does he foresee any consolidation of this gold rush industry, and what is Shen Tong's investment philosophy in the food sector? So those are kind of all related to plant-based. If you can address that, because we're coming close to the end, and the virtual happy hour will start at 5.
In about 9 minutes. So Sam, Christina, thanks for the question. There is multifaceted about one area is very thoughtful, and first of all, by the very question, you're right. About the bubbles and the economical disparity and who can afford and who has a cultural interest and affinity and who's which segment of the population are more easily changed because food. Like most of the basic cultural elements, are deeply cultural and personal, right? So changing in full habits is very hard. But I think that the most interesting discussion in this area actually requires to take a step back. If you look at plant-based, it's not cell agriculture, meaning taking a cell from a fish or chicken or cow or hog or pig, and then grow them in labs into leather or into food. So that's that in theory it could be economically viable. We don't know that because we need to see it very large scale. But it certainly helped animal rights, right? So it does serve some people's passionate life goal. But that's one aspect of a very complex picture. But if you really think about plant-based, it's not about just that, or it's not about highly processed meat is bad. It's full of chemicals, lots of calorie, very little nutrients, and that's why Western population, the richest countries in the world, become fat, sick, and hungry for nutrition at the same time. It's chronicle from a system. It's not a bad habit, or it's not like when you have 70%, for example, in this country, the population are overweight or obese. I mean, we crossed that 70% line 2 years ago, right? It's a balance between animal protein versus other forms of protein. So if you look at holistically, for example, our product like a mushroom-based jerky or yogurt made of coconuts, or turning high-end Italian pasta with a vegetable filling, but it's all full of nutrition and color and flavor, because we're tapping into biodiversity, culinary tradition. If you look at plant-rich diet, that's not a rich people's thing. In fact, it's the opposite. It's a very peculiar phenomenon. Only in less than 100 years, more like 50 years, this Western version of diet, which wasn't Western to start with, especially from European perspective, of a highly processed animal protein. So highly processed, they're not really food. Their food look like objects, right? So the oldest living cooked hamburger in Australia is 22 years old, right? The oldest living packaged snack is called it's a Twinkie is over 40 years old. They don't go bad because bacteria don't attack them, right? So they're humans are tricked. We're not as smart. We know that as a whole species compared to microbiome, bacteria, and mycelial networks, right? So back to the question. So if you look at the plant-rich diet, we're merely finding a balance of modern, highly processed animal protein, which represented by McDonald's and the Burger Kings, those kind of fast food chains, right? And balance that with what's been always there, which is we're omnivores, right? Which is majority should be plant-rich diet. So this is your grocery. This is sourcing more produce, legumes, and pulses, and bringing culinary tradition back, even in the U.S. Right? Bring that culinary tradition back, putting that more into plant-based snacks and different packaged meals. So if you look at holistically, plant-based is very much needed and is thriving. These pockets of hot topics are helpful because they lift all boats.
I'm going to take one final question because you have 3 minutes, and I would like to take a group selfie with everybody who's here. We can do this. So Mauditz had a question. Do you see shift from beef and pork towards chicken, egg for people that don't want to become vegetarian or vegan?
You see shifts from beef. Well, it's happening. The meat alternative space largely fall into, I'll say, three areas, right? And the cell agriculture, the drive come more about animal rights, but also deep-seated needs. I mean, look at our teeth; we're still omnivores. Right? I mean, if there are meat sources that are not hurting animals and not helping what's known as a kafu system, the industrial animal farms, right? People will want that. So the only 3 years ago, veganism is still seen as a fringe, extreme ideology among small group of people. They may be respected, but they're certainly not in mainstream. Now it's mainstream concept among not just millennials, but Gen Z, and it tied into environmental values and all that. So yes, it is happening. But the other two facet of this plant-rich diet holds more promises, in my opinion. You know, it's replacing meat with plant-based. In the case of Beyond Meat, or in the case of our thesis, which is not highly processing anything. You know, just replacing animal protein with plant-based and process them will only solve one problem. Holistically, the best solution as an approach is to tap into nature, which is biodiversity, wholesome ingredients, and culture, which is prepare and preserve instead of processing. So basically, as this answers Christina's question, our philosophy is that our philosophy in food sector is to invest in wisdom. We invest so much and did so well by investing in knowledge. In general, not just the last 100 years and last 30 years, but last 400, 500 years is the scientism mentality, right? Now it's time to balance, to think about wisdom system that work, that is much larger, much smarter than what we so far understand, such as billions of years R&D in nature, hundreds, if not thousands of years R&D in culinary tradition. Use science and technology to leverage those two complex, smarter systems that we know they work, we don't know how exactly they work, instead of replacing them. That's where the value creation and impact creation is coming from.
Okay, let's try something. First time, a group selfie for everyone. At the bottom of your screen, the fifth button to the right, from your left, you should be able to make a short photo. It'll take all the photos together and it'll send you a group selfie. So let's try this in the last 36 seconds. Two people finished the selfie. 4 people finished it. Everybody try to make one. So let's try to get 5. 22 people in here. 6, 7, 8. Go ahead. 9, 10. Almost there. Almost there. 11.
Log out and then log in.
12. I'm going to end it in a few seconds because we have to end this. Okay. 13. Anyone else? Yeah. Okay. We're going to end it now. Thank you all, and see you at the virtual happy hour.